Now, the Capital Markets Authority has granted approval to I&M Bank to issue and list a medium-term note of 10 billion Kenyan shillings on the fixed income securities market segment of the Nairobi Securities Exchange. For me, we're joined now by Arun Martha, the CEO at I&M Bank. Arun, thank you so much for making the time to join us. 10 billion Kenyan shillings. Where are you planning to deploy this capital?
Yeah, we are trying to raise this capital in 3 tranches. The first tranche that we are launching this month will be for 4 billion, including the green shoe option of 1 billion shillings. And depending on how we continue to grow, we'll be raising a second tranche next year and thereafter the following year. So the total raising is 10 billion shillings.
And this 10 billion, Arun, is this to fund your expansion strategy into the region?
Apart from the growth and expansion for the bank, we are also looking at the capital adequacy ratios in line with international best practice Basel II requirements and also the CBK prudential guidelines. So we are just planning ahead for that. And also one of the other objectives was, as you may be aware, our shareholders are Proparco and DEG, and they have also recommended that we need to raise some long-term borrowings and Kenyan shillings to improve upon our maturity profile, the mismatch that we have. We have short-term deposits financing long-term loans. And also, I think it will also improve upon our capital management as far as the balance sheet is concerned. And of course, for working capital, etc., as we go forward to make sure that our cost of funds can be optimized.
Of course, there's also been quite a lot of interest around some of your stated plans to go into Uganda, South Sudan and Zambia. Should you venture into those particular countries, are we likely to see you follow an acquisitive strategy or put in some fresh licenses?
We would prefer to go by the acquisition route, which we are more comfortable with. We have not done any greenfield ventures in countries outside where we operate. And our acquisition strategy has been quite successful so far. So we'd like to stick with that if possible, definitely for countries which we are looking at like Zambia, Uganda that you mentioned, yes.
Of course, understanding that this is your first fundraising venture since listing in June of this year, what appetite are you expecting from investors in terms of subscription?
I think we are expecting a good response because I think we are well known by now in the market. We are seen as an institution which is quite solid, and we are seen as an institution which has got a good reputation. So we do hope that investors will support us. Our equities shares are doing quite well as far as our holding company is concerned. So we see a lot of interest as far as investors are concerned, and we have a good profile in terms of regional presence. The number of customers that we serve across the 4 countries has really shot up. So we are hopeful that we should be able to raise the money that we are targeting for.
Of course, the 91-day T-bill is often used as a benchmark to gauge performance, and we know those rates generally come in at 10%. How do you think you're going to fare against that benchmark?
We have what we are trying to do is to have both options, a floating rate option and a fixed rate option, because fund managers yet nowadays look at both. So we have both the options available to suit the appetite of the investors, especially the fund managers. So that's what we have done. So the fixed rate option, of course, becomes very attractive because you know what you're going to get, and interest rates do tend to be erratic from time to time. And so even if the expectation interest rates might come down, but if they do, at least the fixed rate option will do well. And if they don't do well, if the interest rates don't come down, if they go up, then the floating rate option does very well. So it's a win-win situation for both.